Welcome to this deep dive. We're really thrilled you've carved out some time for us today because we are getting into an excerpt that maps out the 2026 economic landscape for micro, small, and medium enterprises, or MyPIMEs, as they're known.
Yeah, and specifically, we're looking at how financial analysis has just completely shape-shifted over the last few years.
Right. And the mission today is to help you reframe your mindset. We want to move away from treating financial analysis like that, tedious end-of-month chore.
Exactly, and move towards seeing it as a real-time predictive navigation system for business survival and growth.
Because
Because that mindset shift is crucial. I mean, in an environment where extreme market volatility and accelerated digitization are the baseline, relying on outdated spreadsheets is a literal hazard.
yeah.
The data is meant to pull you forward, not just document where you've been.
It used to be that you'd run your vertical analysis, right? Like taking a snapshot of proportions to see what percentage of sales goes directly to production costs.
Right, or you do a horizontal analysis.
Exactly, tracking those month-to-month or year-to-year growth trends. But you were doing it just to figure out what happened last quarter. Reading through these notes, though, the emphasis is entirely on predictive modeling.
It all comes down to velocity. Because cloud tools are absorbing data constantly, you aren't waiting 30 days to run a horizontal analysis to spot a downward sales trend.
Right.
The AI is doing it hourly. So instead of using a vertical analysis to realize production cost ate up way too much revenue last month, the system projects that ratio into next Tuesday.
Next Tuesday, based on current supply chain fluctuation.
Yes, it allows you to pivot before the damage is actually done.
So it turns those classic financial ratios into literal real-time vital signs.
That's a great way to put it. Think of the four core categories. You have liquidity,
The asset test.
right, to see if short-term debts can be paid.
Yeah.
Then profitability, which is your net margin. Efficiency, like your inventory turnover. And solvency, basically your leverage.
You all know these metrics.
Sure, but in this 2026 landscape, they act like a continuous pulse monitor. If your net margin dips slightly because of a sudden spike in raw materials, you don't find out at the end of quarter review. The system flags it as a dropping pulse rate immediately.
Which completely cures what I call the 3 a.m. cold sweat.
Oh yeah, definitely.
When you wake up in sheer panic, wondering if payroll is going to clear because the master spreadsheet hasn't been updated since Tuesday, that reactive panic just evaporates.
And it replaces that panic with control. With real-time visibility, you can actively optimize your working capital so your cash isn't needlessly trapped in operations.
And you can plug those phantom expenses.
Yes, those invisible leakages that drain capital. An AI spots a recurring, redundant software subscription instantly. It lets you use return on investment proactively to pinpoint exactly when it's safe to buy new equipment or expand.
So if these vital signs are pulsing in real time, how does that actually change the external reality for a manager trying to stay afloat? The research heavily links this to fintech and even ESG, which I kind of want to push back on a little.
Go for it.
I get the fintech side. Digital banks use these ratios for algorithmic credit scoring, so better ratios instantly get you better interest rates. But ESG, are investors really looking at operational efficiency as proof of sustainability, or is that just a 2026 buzzword?
It sounds like a buzzword until you see how investors are actually behaving now.
Yeah.
In 2026, operational waste is viewed as an environmental and governance failure.
Oh, interesting.
If your real-time analytics show tight inventory turnover and optimized supply chains, investors interpret that as a reduced carbon footprint and responsible management. Tight operational efficiency has become the literal metric for sustainability. It's not just about green initiatives anymore.
It's about proving you don't waste resources.
Exactly.
That makes perfect sense, and it really frames up a quote from the source material that captures the whole essence of this shift.
The one about survival versus scaling.
Yes. Quote, in 2026, the difference between a company that survives and one that scales is not the amount of capital it has, but the speed and precision with which it interprets its financial data.
It is a profound reality. Whether you are scaling a highly backed startup or you're simply managing the operating budget for your own department, interpreting data in real time is unequivocally your best navigation tool. The capital doesn't save you if you can't see the iceberg.
So what does this mean for you driving to work or sitting at your desk? I want to leave you with a thought to mull over.
A final question?
Exactly. If AI and cloud accounting are now automatically calculating all of these complex financial vital signs in real time, will the most critical business skill of the next decade really be mathematics? Or will it simply be the psychological courage to act on the story the data is already telling you? Thanks so much for joining us on this deep dive.